If you can count to 5 and you know your ABC, then you can make money from the markets. Today, we're going to focus on making money on Bitcoin and Ethereum, and I'm going to really simplify technical analysis. So if you like today's video, like, subscribe, hit the bell notification. Let's dive straight into Bitcoin. We are on a 1 hour Bitcoin chart. Remember I said, can you count to 5 and you know your ABC? Well, it's because the market tends to move in 5s and 3s, and it tends to be relatively predictable once you can see what's happening. So what we've had with Bitcoin, it seems to be a nice movement to the downside, some type of 1, 2, 3, 4, 5, and we're anticipating an A, B, C correction. Now this was the anticipation, but this is what's occurred so far. Now, what we want to know is this wave over here is called a wave C, and it tends to break down into a 5-wave structure in itself. And sometimes it doesn't hit the projected target zone. So what we're going to look at a bit closer is the structure of this, because sometimes it's called a ABC flat. Most common in ABC zigzag, where the wave C goes above the wave A, but sometimes the wave C fails to go above the wave A, and that's called an ABC flat. It's a sign of weakness, and you will tend to get a follow through to the downside of the former trend. Really, really important. So I'm going to cover a bit of detail today. We're going to use a bit of Elliott wave, which is the 5s and the 3s. We're going to use a bit of Fibonacci price, and we're also going to lean on momentum. So if you're brand new and you want to learn more about trading, I've actually got my 4 secrets trading masterclass, how to make money from the markets. It's short, sharp, to the point, but I really simplify things in terms of how to count to 5 and ABC and how to relate that to fear and greed and buying and selling behavior. That's free. It's in the link below. Check it out. You'll be thankful that you did. It's very, very powerful. So when we're looking at Bitcoin, what I want to do now is two things. We need a bit of Fibonacci price. So more often than not, wave A and wave C have a relationship to one another. Most common relationship is 100%, as in wave C is 100% of wave A. The second most common is normally an overextension, 1.1618 or 1.618. And then the third most common is 0.618. And it looks like this is the one that's going to be applying over here. So I'm just going to show you this because this can give us context. And there's a couple of other things that I want to just share with you today. So I'm just going to measure wave 8. We'll take the peak of the movement and we'll take the bottom of this wave down here. It's gone all the way down to here. And the 2 key numbers I actually want is the most common is the 100%, which is up here. And then the least common is the 0.618. And you can see we're in that zone right now. We're nowhere near the projected retracement, which is up here. We're nowhere near this. But it doesn't mean it's, it can do this, but it's unlikely, right? So we're probably going to see it get overbought, and we're probably going to see some type of movement to the downside. What I then want to do is I want to now zoom in to this structure over here. And I really want to emphasize the 5-wave move, because it's likely we're probably going to see the wave C top out over here. If I can just then put in a nice big question mark, and that just reminds us that the wave C has not been confirmed, because one of the troubles of drawing Elliott waves on your chart is you can get too caught up in your own drawings. And remember, we never know what's going to happen. We can only see what's highly probable, what's likely to happen. So now what I'm going to do, let me just move this up here just to keep the chart nice and clean. And I want to now look at this wave structure. We've got this nice move up. It looks like an ABC correction. Remember what I said, 5s and 3s. We've got this nice move up. Looks like some type of ABC. It's pretty common for a wave 2 and a wave 4. And it looks like another move to the upside. And again, this has not been confirmed yet, but this is called a potential wave 5 of a wave C. Right? That's what we're looking at right now. And what we can do, I'm going to get into a bit of detail over here. Don't worry if it goes a little bit over your head, but there's price relationships between wave 1, wave 3, wave 5, wave 1 to 3, and so on and so forth. And one of the most powerful, I'm going to do 2 over here. I'm going to go too much into detail, but it'll be detailed enough to give you value, is we're going to measure wave 1 to 3. So the beginning of wave 1 to 3, take it from here, and we're going to just project it from this low down here. And the two most common, well, the key ratio we want to be aware of is this over here, because this cluster's over here and this cluster's over here. So we've got two price zones. So these are two high probability price zones. And normally what happens with buying behavior is if it breaks out above here, it will normally find resistance at the next price zone. It's just psychology of buying and selling. And these are the most typical, most common. And I'm just going to do one more. It's called an external retracement. I'll do it relatively fast. Whereas basically we're going to take the extreme of wave 4, the high to the low. And most wave 5s actually end between 1.272 to 1.618. And that just confirms for me that this is the high probability, again, never guaranteed, high probability top that we might see Bitcoin topping out before some type of pullback. And we just want to be alert on this. So if you've got a stop loss in play, it should be no lower than this point over here. Because if the market goes below this point, that will be the first confirmation of a top, and then we'll probably get some type of follow through to the downside. So that's Bitcoin. So remember, if you want to learn and take your trading to the next level, check out the masterclass. It's free, 4 secrets. The reason I'm doing it for free, you get to get a flavor of how I teach and what kind of skills you can really learn from my 15 years of trading experience. And if you like it, you can upgrade and buy my courses. There's the foundation of Elliott Wave, Fibonacci price, Fibonacci time. We've bonded it all together. Massive value. You're just blown away with the amount of value that we're given at the moment. But the free stuff is massive value as well. So what we're going to do now is we're now on an Ethereum chart. It's on a 1 hour chart, but what do you notice? Remember what I said at the beginning. If you can count to 5 and you know your ABC, at least the ABC, you'll see these patterns repeating themselves time and time again. Why? Because it's crowd psychology. Fear and greed. Always playing against each other. The bulls and the bears. That's just what the markets are. Speculation. Short term. Anything under a year, under 6 months, under 3 months, under a week, especially within a day. It's all just fear and greed, speculation. And that can help us when we're reading the markets based on Elliott Wave, Fibonacci price, and momentum. So we're going to lean a bit on momentum first now as well. So down here in the bottom right-hand corner, I've created a tool called the Trend Identifier Dashboard. It's like an executive assistant that helps you see the trend. And what you want to do is look on 2 time frames. And what I mean by 2 time frames is right now we're on a 1 hour chart. The higher degree time frame is a daily chart. And the higher degree time frame to that is a weekly chart. And ideally, you want to have 2 time frames that are pointing in the same direction. But what do we have here on the smaller degree time frame? Here, we're using that as the daily chart. It says the momentum is strong overbought and the upside should be limited. Right? That means the upside should be limited. Doesn't mean there's not going to be any upside. It just means be aware that we might find a top. Right? So that's the momentum that's telling us that. By the way, if you like this trend identifier dashboard, you can now actually trial it out for £1. It's in the link below, and then it's $9.97 thereafter. I give a whole lot of training on this as well. Complements the masterclass really, really well. It's just a lot of learning, but I'm just trying to simplify things because I've been trading for 15 years now, and everything in life is difficult before it's easy. But that doesn't mean you can't take a shortcut. And if you can take a shortcut, then by all means, don't reinvent the wheel. Okay, so when we're looking at this, Elliott waves. So we've got the momentum. So that's telling us the upside is limited. Is there pattern and price that is also indicating the same thing? Well, we've had, again, this 1, 2, 3, 4, 5, clear, very impulsive wave 3. 5 wave move to the downside, and it looks like a typical ABC zigzag. This is what I was referring to earlier. Most common is when the wave C goes above the wave A. Right? That's most common. It's less common than what we're seeing with Bitcoin if it unfolds that way. So it looks like an A, B, and some type of wave C forming, right? So what we're going to do is a bit of Fibonacci price, what we've done already on Bitcoin, but we're going to do it for Ethereum. So we can do the same thing. We're going to do the 100% alternate price projection. So we're just going to take this extreme there, and we can see that this 100%, which is the most common, remember the 100% is the most common, and then the second most common is 1.618. So we've got these 2 price ratios. We can actually get rid of the middle one because it's the clusters that we're really, really paying attention to because it makes it higher probability. And I'm also just going to do an external retracement. Right? This is what we did for Bitcoin as well. We'll take the extremes. Same thing that we did for wave 4. Just going to take this extreme. And again, same ratios. We want the 1.618 and the 1.272. So this tells us this is the high probability top of a wave C. I want to be on high alert because we've got three things. We've got the daily momentum, which is overbought. That's the first clue. The second thing is we've got this ABC pattern, right? So that's the second clue. And then the third thing we've got is a retracement, an alternate price projection, and an external retracement. There are three different relationships all clustered close together, which is very significant. If Ethereum breaks this zone, then the next high probability zone is over here. If, and there's always a possibility, and this is how you want to trade, thinking with the paradox, even though this is highly probable going to be a wave C, it doesn't mean that the price can't overshoot and there's something else happening. And if this high gets broken, then we just reevaluate, and there's something else happening. It's much stronger than it's looking at the moment. But what's highly probable right now is an A, B, C correction in this zone or this zone. And then there might be nice opportunities to short this market on a swing low. What I like to wait for, because they're different, there's always a give and take. You can try getting a bit earlier, but it's high risk of getting stopped out. Or you can just wait. And one of the things you can wait for is, let's just say let's say it does get to up here. And then we can wait for a big move to the downside and wait for the first pullback. And here might be a good shorting opportunity, which might do something similar to what happened over here. I don't know what that drawing was there. Here you go. That's what happens when you draw with a mouse. But what do you think, right? 5s and 3s, do you see it? These patterns tend to replicate and repeat themselves time and time again. Why? Crowd psychology. Individuals are quite hard to predict, but crowds are relatively simple, especially with infant markets like crypto. But the same applies for pretty much all markets and all timeframes. So again, if you haven't already, check out the masterclass. It's free and it just take your trading to the next level, absolute next level. And I'm telling you, you'll get a lot of value from it. And if you like it and you want to join my private Telegram community, we do weekend workshops. We've got a lot of stuff happening at the moment, a lot of value. Get on the inside and we'll help you become a successful trader long term. I'm going to read you a quote from my book. Let's go with chapter 5 today. Let me see, what is chapter 5? Chapter 5 is Leonardo da Vinci. And I like this one. Because it's really, really poignant in what he says. Simplicity is the ultimate sophistication. Simplicity. 5s and 3s. If you can count to 5 and you know your ABC, now what I would challenge you to do is look at the market with this new lens. Now keep in mind that it's only 50, 60, sometimes 70% of the times these patterns are clear to see. One of the things I teach you in the masterclass and in my courses is that if the pattern is not clear to see, then it's not there. Go find a chart or an asset or a crypto or a forex pair that is displaying clear crowd psychology of 5s and 3s and just get that edge in your favor. So it's pattern, price, and momentum. They're the core 3 things as a foundation. And if you can do that consistently, all of a sudden you are separating yourself from the losing crowd that tend to lose money consistently.